Greetings guys, I welcome you in this video. There is something important that I want to share with you. I've been talking about this thing in some of my previous videos, but because it is so much important, I just want to emphasize it more in this video. If you can see, we have a very important level there. It is our resistance level, and when the price create a resistance like this and maybe a support like this, we know that when price approaches that area, we're expecting price to either slow down or price to either react. But here is a very important trick. If you want to know that price is gonna reverse from that level, here is what you have to do. Firstly, you have to analyze and understand the wave that is that the price is moving with towards that level. So in this case, it is this trend here. You have to understand the waves of this trend that is heading towards that resistance all the way there. And how do you analyze those waves in that trend? You simply go into details when it comes to momentum. You try by all means to understand the strength of the players while the market is still heading towards that area. For an example, you can see here with the first impulsive wave heading all the way upwards, and then with a corrective wave going down like this, and then second impulsive wave and a second corrective wave. So before I continue, you can already see that we have something very interesting here. We have this corrective wave here, which is very big, and this corrective wave going down here, it is very big compared to that one. So this corrective wave heading down is a little bit small, but then this one is a little bit big. And let me show you one more thing with an impulsive wave. And you can see now this impulsive wave, it is very small compared to this previous one. So this is just the main secret. It is for you to understand the size of the wave. So the size of the wave matters when the market is heading towards an important level, because the size of the wave, how the size is changing, is going to tell you if the market is going to reverse or the market is going to continue. This is something that you have to use when you're trading a price in a range. So we can see here this impulsive wave here, it is becoming smaller compared to the previous one, and this corrective wave is becoming bigger compared to the previous one. So when the corrective wave becomes bigger and the impulsive wave becomes smaller, it simply tells you that the strength of the trend is going down. This is just the formula that you have to use. When the corrective waves, they're becoming bigger and the impulsive wave are becoming smaller, it means that the trend is losing strength, and it is likely that the market is going to reverse, because sooner the market is going to begin to give us highs which are now lower and lows which are also lower. But before, it was giving us higher highs and higher lows, but because of this that I'm explaining here, we are likely to receive lows which are lower and highs which are also lower. So if you can see now, it has already created a minor resistance in this area, and you can see that if we just extend our pattern down here, you can see that now the pattern is becoming broken. And when you see a pattern break, it is simply a sign that okay, now the price like to go down. So in this case, I can say that it is a very good time for you as a trader to look for shorting opportunities. Why? Because the market is now failing to give us higher highs, and it is now breaking the flow that it was using to create the trend. And so the trend is becoming weak, and the market is giving us a breakout. So it simply means that the sellers, they are now shifting from being weak into being strong. Why? Because their waves, which are the corrective waves, they are becoming bigger and bigger. It means that their strength is shifting. The buyers on the other side, they are becoming weaker. Why? Because their impulsive waves, they are becoming smaller and smaller. So I hope this is making sense. So this is how you should analyze prices when they are approaching levels. So you can see that this level was tested a bit by this tail, but that means that the price was rejected there, because if you say a tail, it means rejection. So price was rejected there, and it was easy for you as a trader to say, okay, let me execute a sell. Why? Because of this that was happening here. But traders who were wise, they were able to find the sell maybe somewhere around here when this second rejection came in this minor resistance. But because we want a safety, it is easy for us to identify a sell after the breakout around this area there. I hope this is making sense. Whenever you are analyzing a trend, always pay attention to the waves on how they are changing in terms of size. So just pay attention to the size of the waves and you'll never go wrong. I hope this is helpful and I hope this is making sense. I'm just gonna keep it short and leave it here. Thank you guys for watching.